Welcome to Forex.Today, everybody. How you doing? Hope you're left large. Oop. Oop. Stream, close up. So anyways, the uploading issue apparently has been fixed. Daniel says he still can't. Try refreshing your page or logging in and logging out and then trying. Apparently it's fixed. So give her a try. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. If you stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you have not become a client yet, please visit TradersWay.com and open up an account. A demo account takes maybe 30 seconds. That gets you access to our webinars every day, but it also gets you into our back office, and you can download MD4. You can test out our spreads. Our execution speed. And I was trying to draw a black top hat, but for some reason it won't draw black. Huh. Could be a bug. Sick of bugs. We do these sessions 7:30 a.m. Monday through Friday here at Forex.Today. Except for the first Friday of every month, I'm at FXStreet.com, where I host Trade Non-Farm Payrolls Live, and I've been doing that for over 11 years. Coolio, huh? So anyways, visit TradersWay.com today. So what's on your mind? So I am just looking at the peso here, continuing. This is the first couple of days of the month. See if I can change colors down here. Wednesday, Thursday, Friday. The key days being the first of the month and the Friday, payday. And it's still heading down. Down, 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 down. On the 1 hour chart. Isn't that awesome? Thinking about it, man, you could be short this since May 1st, really. And now take a look at the moving averages here, because you have to remember a million years ago when I was teaching myself Forex, I wasn't sure what to use to do technical analysis or just analysis to analyze what the market's doing. In this combination, I felt comfortable with. You could see how there was a big drop, back to the 21, drop, back to the 21, drop, back to the 21, drop. All of a sudden, the angle of separation here between the 21.55 is diminishing. So if you can imagine, MACD is rising. Wait! I know I don't have a MACD on this chart, but MACD would be rising. And now suddenly you'll see the 55's in charge, not the 21, which is telling you it's slowing down. And if it does find support, you can start to see at least less down. Less down doesn't mean up, but it starts with that, doesn't it? It shows you if you stay in it, stay with it, Okay. Little past repatriation now. No, I think it's just dollar weakness. Yeah. Whatever. Let's go on a little trip on my favorite rocket ship. Okay. What do you see? Almost a weekly target. Okay. Seems like these green zones might be important. Well, remember, we already know the rate hike. What we don't know is SEP and DEES. Is it SEP and DEES? Is it SEP or DEES? Is it just DEES? Do we not know? So that's what matters. So anyways, what do you think about oil? Is anybody adding oil to their repertoire? Like you're seriously analyzing oil every day or every week? Well, prisoner dilemma on oil producers is, well, as production increases. No, I mean, OPEC would have that issue, I suppose. But I guess you could play it that way. Yeah, on just all oil producers. And so, with the prisoner's dilemma in mind, James, is it best to cooperate and get higher oil prices, or is it most logical and intelligent to defect, even though giving you a worse outcome? Let's try to map it. Let's see if I can do this. Okay, prisoner's dilemma. Cooperate, cooperate, defect, cooperate. All right, so cooperate, cooperate. Let's say it's 4, 1, 1, 1. I get 5 isn't enough, but let's do it like 5, 0, 0, 5. Okay, that's a prisoner's dilemma. So James is talking about it. Is there a prisoner's dilemma going on with oil producers? Well, if they can cooperate, right? so I guess I got this wrong. There we go. If they both cooperate, they get 4s. If somebody cheats, they get 5, and everyone else gets 0. Okay? So if player 1 here defects and cheats on player 2, because they're defecting and this person's cooperating, so producing less oil, cheating. Okay? So this is P2 now up here. I can't draw it, so P2. So if player 1 decides to defect while player 2 decides to cooperate, there's a big payoff for this oil producer because everyone else is slowing production down as agreed, right, to raise oil prices. So oil prices start going up. So player 1 cheats. They defect. And there's a huge payoff because oil prices are going up and that producer of oil is pumping as much oil as they possibly can. They're cheating. So if player 2 thought player 1 would probably cheat, they're going to cheat too. Because nobody wants the 0. Right? In this case, player 1 gets 5, player 2 gets 0. If player 2 cheats, they get 5, player 1 gets 0. They're all better off just cooperating, but there's so much defection built into this that they end up at, what do you guys call this? Super bonus points. Hint, hint, Nobel Prize. Nobel Prize for economics. What do you call that? Is anyone even going to guess? I don't know. This is James' thing. James wants to know, is there a prisoner's dilemma in oil producers? I don't know. Let's look at the math, right? Stalemate? No. All right. Nobody knows? Oh, Brandon, what kind of equilibrium? Let's go, Brandon. Let's go. Come on, Brandon. Everyone's Googling. Who is the Nobel Prize winner? Beautiful Mind. You watched the movie A Beautiful Mind? Not for what price? Oh, that's right. Joe's got it. It's a Nash equilibrium. Good job. Yeah, so there you go. So is there a prisoner's dilemma going on in oil producers? Is James' questions? Well, probably. If there's an incentive to cheat, people will probably cheat. Now, there's different strategies for this, right? And you can randomize between the two and get different Nash equilibriums and stuff, equilibrii. But anyways, you're better off defecting, even though there's a higher payoff if you both cooperate. You're going to end up here eventually. So think of it this way. What if you wanted to cooperate? You're a good person. You want to cooperate. So you're player 2 here, and you're like, yeah, let's cooperate. So player 1 screws you over. You get 0, and they get this huge windfall. Okay? That's your first interaction. So maybe you go to a second OPEC meeting. Okay, maybe we're talking about the Russians now versus OPEC. So Russia shows up to the second OPEC meeting, and OPEC's like, hey man, you totally screwed us over. You signed this agreement, said you would cut production, so now I'm in Saudi Arabia, right? Saudi Arabia's like, Russia? What are you doing? You totally screwed us over. You said you'd cut production. We cut production. Entire OPEC cut production. You said you'd cut production. Oil prices went up, but then you actually increased. You didn't cut. Do you think there's going to be a trust issue? Right? So what happens is when now you have a series of these things, in set one, you might cooperate, and if player two doesn't cooperate, if player two defects, then in the second iteration, you're no longer going to want to cooperate, you're going to want to defect, and you end up in Nash equilibrium, even though there's a lower payoff. And you'd rather cooperate, but now there's a trust issue. And by the way, there's an entire math for this. But whatever. So anyways, James is probably sorry he brought it up. So is there a prisoner's dilemma? Of course there is. Does anyone know how to solve that with the cartel? Carry a big stick. Pablo Escobar ran a cartel fine. You defect, you're dead. No more defection. No more iterations, you're dead. Resets the game. So anyways, yeah. Is there a prisoner's dilemma? Of course. All right. So anyways, I guess, what do you want to do here? Hey, hey, hey. Hey, there, boo, boo. What is the projected target for the week? Hey, there, boo, boo. Well, that's the problem, isn't it? So the top of the month, that's about the first of the month, is here. Are you going to call that a monthly central? It's pretty close, huh? So if you call that a monthly central, we're going for S2, MS2. And we're caught right now on a curious little number. I'm trying to get closer here. A curious little number. The conservative bottom for for June. The conservative bottom for June, based on the methodology I teach you. I don't know what other people do. Doesn't matter. Everyone's got their own thing. I can't imagine any one way of trading being the right trade, the right way. I look at trading like everyone trades differently, and we're all wrong to different degrees at different times. But the conservative target here, I still can't even get in there. Let's get closer. See, I can't even see it. Oh, my, terrible. I can't even read that. Even with glasses, I can't read that. Did anybody read that? Anyways, it's right there. Right here. Oh, 132, 133 basically, right? 133? Is that right? That can't be right. 132.40? Gee whiz, I can't even see that. Yeah, 130. Yeah, let's just call it, no, 131.50? No. No, 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 no. Conservative target is this green line. I'll highlight it. Okay. Conservative target for the month of June. Conservative bottom. MM1. Okay. Lovely till your mum, right? Anything else going on here? Lovely till your mum. Don't forget this bottom. You should mark it for the future. Maybe it'll be important again someday. How curious, huh? They're right in here. Now, ultimately, we should head to the farther one, MS2. 131.4444444. Yeah, so 131.50. But that could take 2 weeks. It could take 2 days. Well, I don't know. Does it have to go that far? No, in fact, it does not. That's why we have a conservative target and an aggressive target. Seems to me we have to get through this nonsense, huh? Do you think that'll be straightforward and easy? Just break through that like a hot knife through butter? What do you stake? Or it's an opportunity to scalp. All the gold in California. Seems like it's predictable, isn't it? Sit a bank in the middle of Beverly Hills, somebody else's name. So we're working on a higher, a lower high, right? Maybe. We're working on a D21, right? Daily 21. Do you see opportunities to trade based on that thought process? Could you say, hey man, somewhere in here is the daily 21, but you're on a 15-minute chart? These are all trade plans, guys. Things to be ready for. Okay? Okay? 618 retracement predicts a 1382 extension, which is also the next pivot. Could you still possibly be a bull on euro dollar? I know there's a Fed announcement tomorrow, but let's just talk technicals. This is a tech talk. We're in a bullish buy zone, aren't we? And we have been all week. Kind of interesting, isn't it? Okay. This is a bullish buy zone. You definitely could be a buyer here. If you're a bear, your zone was up in here and you're waiting for this to roll over. So it's not a good time to be a bear at the moment. If it rolls over and produces a top, let's just call this a top. So if it doesn't head up to the next pivot, okay, it may be down. You could also head to this pivot and then roll over, right? And don't call this a head and shoulders, by the way. Okay? But it could also do that. Where amateur traders fail is they look at this and they ask the chart to tell them which one is correct. If you ask your chart, you're already wrong. However, if you're a bear looking to sell, a touch of this pivot with a drop below this neckline will set up a lower high scenario off of that neckline, which would then give you permission, if you will, to engage. But your enemy is clear. You're not trying to figure out who the bad guys are. Okay? And if you're a bull, you know where you want to buy. That'd be it. Of course, the risk here is something happens tomorrow. Fed releases their statements, and the market could go haywire because of what they said, because of what they didn't say, because of what people thought they said. Okay? What are they going to do? I don't know. How is the market going to react to it? I don't know. How much has already been priced in? I don't know. How about here? So do you remember? You probably watched the news just in the last 24 hours or even the last 12 hours. People are really very shocked about the pound and that, it was a crazy drop. It was so unexpected. The market freaked out. The pound has lost so much, but today it's amazing. The pound has recovered. I mean, it's just funny, isn't it? Why is it funny? That's the projected bottom for the month. Now, there was a repricing of the Great British Pound versus the US dollar. That's true. But did the market really freak out? See, this green line and that green line, and connected, I already have it all yellow for you, right? That's the projected bottom for the month of June. All right, the pound weakened, there's no doubt, and it was probably appropriate. But it's not chaos, is it? Because if it was chaos, we'd blow right through there, and like the pound is super weak or super strong. But no. It repriced, but not to like some crazy weird price. Like, all right, it needs to come down, but whoa, not any farther than that. Brandon says, would it be unwise to short again for the rest of the month? Not unwise, just less probable. And you could translate that into, well, that may be a risky strategy. So riddle me this. Why would it fall further? And you're like, well, my analysis tells me. Oh, you have some analysis. Pray tell. And then you would say something intelligent, right? So that's all. Now, a better version of this, and it's probably not even here, so let's just go over the beast. Today was interesting on the beast. I don't think I even looked at it on this machine. Let's load it up. Okay. Can you see it over here? Weekly pivot, monthly pivot, psych level-ish, closest. But anyways, definitely something going on here, right? Pretty logical, pretty intelligent. Now, it certainly has the capability of moving further down, right? But what's important about this 138-ish level? And I'm just going from memory, guys. This is a double top we talked about middle of May. And I think I warned you that the pound yen was up hundreds of pips, hundreds and hundreds and hundreds of pips, that it wasn't going to last. I think one of these pound yen trades we pulled 300 pips out of in April. Okay? So I recall this as a double top. Oh, there it is. Pretty predictable. Now, as you can see, a long time ago, weeks ago, I drew this orange line, which is now in the middle of the pivot profit zone for the month of June. But we drew it, I don't know, May or even April. You see how it goes back over this here and through all of that? I'll draw it just to make sure. All of that occurred. We did all of this analysis before June, maybe even before May. Okay? Yeah, so, all right, so yeah, I do remember being long in here, and I said, and we talked about it, I said, I don't know how high it could go as high as it wants, but my attitude or my bias or my alpha, if you want to call it that, right, is that I'm going to put a limit on this thing at 333 pips. And if I add more, they will also have limits, right? Oh, I hope you guys remember this, but this is like April that we're talking about, right? That my attitude or my plan was there's going to have a limit. If I can get 333, golden, man. Don't worry about it. Don't be a hero, right? And if I add another one, same thing. Just put down a 100, 300 OCO, right? And then I said, if it were a different time of the year, I'd have no pip base or price base target. There'd be no limit order. There'd be no intention of being out unless something on the calendar tells me to get out. Okay, not on the price continuum, but the time continuum. Okay, because I'd be building positions and portfolios, right? Does anyone recall any of this? Back in here that, hey man, this is a fantastic rally. It's need to take the money when you have the opportunity. And remember, as it's going up, I don't know where it's going to, I don't know when it's going to fall if it does. I don't know how big the pullback, but I'm sure I said things like, don't be shocked if it comes all the way back. Don't be shocked if it does, because it very often does this time of year. Up 1,000 pips, down 1,000 pips, sideways for 6 months. Right? Can anyone confirm this? Henley says yes. Anybody else? I need to know what you remember. Okay? Good. All right. So anyways, it did come back. Okay? Beautiful price action on here, by the way. But the point I wanted to bring up now, well, first of all, we've hit the target for the month of June. Oh. So this whole move might be over. We don't know. Back in May or even April, we identified this orange line as being the target. But now, from this point of view, we're not that far from that orange line. Like, are we going to split hairs over that? Oh, Peter, I don't remember, bro. It's probably over several days, several conversations. Okay? Well, you know, yeah, I don't know. But it's not even this year. If you went back 5 years, I would have told you the same thing. If you go back 10 years, I would have told you the same thing. So I don't think it's like a video. I don't know. Just write it down, bro. Just own it, right? But here's my point. This top to this bottom is 1,000 pips. It's a double top, man. Oh, wow. 1,265. Sorry, Charles. Yeah. Cool. Right on, Peter. Golly, gee whiz, huh? So when we talked about this going up, I said it's not going to go up forever. Don't be shocked if it comes back. And then don't be shocked if it moves sideways for 6 months. Now, what's sideways? I don't know. I don't know. This is why we update our pivots and stuff. But less is the new more. There's going to be more less coming up. And then at the end of the year, there'll be less than more. But right now, we're going to have more less. And certainly less more. So what's the new range? Oh, I don't know. But, how about something like this? And then July, and then it'll even be tighter. So we'll play it here. Okay. So that's all. That's all. So that's the beast, the Widowmaker. Oh. Yen. Okay, let's try to revisit. Okay, this is a conversation where we said it'll either fall here, here, or here. Okay? We didn't know which one, but if the argument was you need to make a decision as a bias, if you had a bias, then you'd set up a trade plan. In fact, if you had a trade plan, you'd sell here, or you'd sell here. And I believe the conversation was, the chart's not going to tell you which one, because this isn't even a good swing. So it's not even a swing trade anymore. This is a swing up here. It just tells you that it's just not, you can trade here, but it probably won't last for very long. And this one would give you a different target or whatever. And this changes things. Now you're going to have a range, but in any case, if you're a bear, you sell here, here, here. The target's here, right? This is a monthly pivot, so obviously it played that, but that wasn't part of our analysis. And then, because it happened early in the week, didn't we say it would come back or it could come back? Isn't the theory that it would come back and touch the central pivot? Is that what you're taught in the swing trading course? Like, isn't that just sick that it's to the pip? Like, not even 1 pip above. But at the same time, not even 1 pip below. Like, what the? Right? Right? Have fun. Be safe. Right? That's amazing, isn't it? Some people took the swing trading course back in April, and we were like, yeah, that would happen in that scenario. In this scenario, hitting this target at that frame, it will probably come back. It doesn't have to, but it probably will come back and touch the central. That's just like flat out a fact. Cool, right? But to add to this original analysis, if you're still a bear and you're taking profit here, if you have an opportunity to resell, where do you sell? And that's what this yellow is now, that just based on old support and resistance, you would look to sell this around here. Right? Then based on swing trading, you also want to sell it. Now I have to change colors. Looking to sell it here, but that particular moment in time too. And what you're hoping for is down, 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 down. Okay? And we've already drawn that. Okay? And if that comes to fruition, which we don't know, especially with that day, we don't know anything, guys. But if the analysis continues its path, remember, a fundamental announcement or an event even, like the Fed meeting tomorrow, the statement released tomorrow, can change all of this. So you can just take all this technical analysis, even though everything is to the pip and all that stuff, you can just throw that crap out. Totally worthless. Okay? It's totally worthless. The Fed can change everything. All of this is irrelevant, depending on what the Fed does tomorrow and what is released tomorrow. And the way they say it, and the way that it's interpreted by others, and all these things, like all that, just throw all this crap out. But it's still good crap now, right? Your analysis is to get you down to here. By the way, which we've already done last week, or you like, it's all old analysis, right? Because what we were doing back here is down, up somewhere, down, up somewhere, down. Look at that. Instead of a 1-minute chart, it's probably a 4-hour chart or a daily chart that you're looking at. That's the pattern. Isn't it? They call this fractal geometry because that's probably what's going on. That's the plan. But then there's smaller time frames in here that are a little different, right? Because you have the big drop and then the pullback. That's pretty accurate. Then some consolidation, and then some waving up, and then some waving down, and then some waving up, and some, that kind of stuff. And then there's even smaller time frames and smaller time frames, but they're all the same similar patterns. Okay? That's called a plan. So, what would you do in a situation where price does this? Is that important? Dude, I'd freak out. By the way, such a coincidence, huh? That's, see this line here? That's the one line, if you're a bullish swing trader, you need to buy. If you're a bullish swing trader, that's the price you buy. You notice how we went like a few pips below? It's because the buy order needed price to drop below, so you got the actual bid. Like when I see this, it tells me the orders were already there. Nobody was thinking and making a decision like, oh, I think I'll wait for a morning star reversal pattern. Wonder what my ADX is saying. Right? Hey, ADX, you think I should buy it? Nobody was even, right? Dude, the orders were there. Already, decision already made. And you're sitting there biting your fingernails. What should I do? What should I do? What should I do? Dude, you know what happened? Monday morning, people decided, oh, I'm a bull. Boom. Buy order. Done. Tuesday comes along. Wednesday comes along. Thursday, they look at their chart like, oh, I made money. Okay? But anyways, if we get a lower low now, then that's the end of our three-wave correction. If you want to call it that. Okay? The big part of this move is going to be when, you ready for this? Let's do it as a thought process instead of me telling. Where are the stops on this right now? Geez, I'm so in between glasses. This isn't working for me. Where are the stops? You tell me. You should know. They're right in here. Some people have it at break even. Some people are already getting out. And some people will be lazy, but let's just say they've moved it closer. Whatever. And then there's idiots like you can never, I don't understand them, so they do weird things. But if you were smart and you bought here, you'd notice that you have an opportunity to reduce risk or even remove risk. So you move your stop. Oh, I just can't grab that thing from the middle. Strange. Anyways, your stop's probably break even now. So if we can get through this, we're going to drop to the next level pretty quickly or pretty easily. Okay? The reason for that is we will be hitting stop losses. Because these weekly swing traders just simply got it wrong if you're a bear. Now they might have it right. And this heads up to this level and then beyond. See, whoever bought it here, this is their conservative target. They're thinking 112 basically, right? 111.50. Okay? So they think they have at least 100 more pips to go to the upside. And they may be right. So these are the decisions here. If we don't get a lower low, then you might want to be bull taking it all the way up. If we do get a lower low, then you want to set up the short. Okay? Right? You understand? That's why I drew this lower low first. A lower low would suggest an end to any upward movement, which would scare the bejesus out of these bulls. And people would start taking profit while they still can. That'll bring us down. Then we'll hit stops, and that'll bring us down further, and then the downtrend is alike. If we don't get that happening, then these bulls are alive, and they're defending. Right now, you can see they're defending this area. What do I mean by defending? Their stops are here, and they're buying. They're scalping, so to speak, to save their scalps. By scalp, I mean the hair on their head. So now they've added to the position to try to get the market bid. Let me go to a 5-minute chart. So now, if they were smart, they've moved their stop from the lower one from yesterday. They've jammed their stop here. They've added another one, and that stop is here. And now the floor has been raised. So if we dip below this, it's going to go. You get it? It's neat, huh? You have to be able to read the market. What's happening? Where are the stops? What are they doing? Who the hell just bought it? People that are already buying it. Why are they buying it? Because they know if this makes a lower low, they're dead. Well, at least their trades are dead. We know what's going on. They're freaking out. I like to think of some hedge fund manager in London, in Mayfair, with his black tee, and he's got his $1,000 khaki pants on, and he's peed his pants. And he has to say, oh, no, I spilt my tea. But no, he didn't spill his tea. He didn't spill that tea, man. He's freaking out. Jamming stops, adding more to try to prop the market up, trying to save whatever he can. Because this is an important spot and an important time of day. New York's about to open, and he's trying to keep his trades alive. And then he's like, hello, I think I wet myself. That didn't seem like a London accent. That was weird, huh? Anyways. Yeah. Oh, I have to go now. That was awkward. Yeah. All right, whatever. So peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Will you be here? Cool. Will this be on YouTube? It's always on YouTube. I am YouTube. Well, that depends. Are you going to give it a like? Well, they may be. Yeah, maybe. I don't know. Are you going to buy me cigars? I don't know. It takes me an hour to upload to YouTube. Well, I don't know. Might have to eat my apple. Oh, the package deal? Oh my God, I'm so busy. I can't believe it. Well, I've started the scalping course. Maybe, you know what I could do is try to set up the package deal, include a scalping course, but be clear that the videos are being added, you know, maybe not all at once, but at least you can start the other 40 videos and do the first 1 or 2 or 3. So I think maybe by tomorrow I'll have the first 3, maybe 4 scalping videos. But at least you can get going, right? It's just like, oh my God, I got to set it up. So yeah. Something like that. Make sure you remember the summer school requires that you have a live account at TradersWay with money in it. So there'll be a new coupon and all that kind of stuff. It'll be a super package deal, like bajillion% off. But you have to have a live account at TradersWay. Okay? And that can take time because you have to go through compliance. So if you haven't done it yet, do it now. Okay? Yeah, all right, cool. I know. I'm trying, guys. I'm trying. Man. I'm trying. Yeah. So see you tomorrow. I'll do what I can.